Hello again, everyone. Welcome back to the channel. This week, we are going to be doing the review for the market open on NAS from November 12th and ending on November 17th. So before we begin, we just pray as usual. God, we just give you thanks and praise for another trading week, another opportunity to discuss ideas and to prepare for the upcoming sessions. We ask that you will meet anyone watching this video. We ask that you will bless our success and help us to continually improve. We thank you. We pray. Amen. All right. So last week was interesting because as you saw, those of you who had an opportunity to watch the previous video that I uploaded last night would have seen that on Friday's entry, I took that entry on the 4-hour break line. And of course, I made you guys aware that there was a slight error on my part where I got in a little bit early, where I should have waited for another 3 hours to actually take that trade. But not a problem. All that happens is that I now have to wait for the retracement for the market to come down. So I'll just show you quickly what happened. So I had set my break line here, okay, right by this blue line. Price came up, picked it up, but it continued to go up and actually interact with the 4-hour resistance line, the 4-hour and the 1-hour resistance line before actually leaving a wick, okay, by market close on Friday. So I should have actually waited for this candle to close, okay, and then enter right about here. Then I would have just dealt with the shorter retracement. Instead, I dealt with this retracement. So now I have to wait for the price to come back down. And the reason why I'm confident that the price will come back down is that price only sells from highs. Price only sells from highs. So look at what happened. Price was at a high point right here, which is actually where I set my limit. Price sold, it came down, it made this low before coming back up to make this higher high. So naturally, if you enter when the price is at a high, it will come down before it actually goes up to complete another high. All right, so that's why I say you sell from your highs and you buy from your lows. All right, so let's look at what's happening for this week. So as you know, I have went ahead and drawn my lines for my week and also for my daily boundaries. So I'm actually tracking 4 weeks of data right now, previous data. So 1, 2, 3, 4. If you're not sure what's happening right here, please go back and visit my previous videos where I actually show you how I actually set up my lines for the week so that I'm able to actually do proper analysis. All right, so what's happening for this week? Well, one thing we do know is that last week, well, on Friday, price actually ended at a high. All right, there's no question about that. Price actually ended at a high. Now it has been selling for the, I'm sorry, it has been buying for the past 2 weeks, starting 3 Thursdays ago. It actually started its buy motion and it basically wicked out on Friday right here. Okay. Now, what am I looking at for this week? Well, let's start from a bigger time frame, which is where I normally start the analysis from. So I go on my monthly. And what am I seeing on my monthly? Well, on the monthly, you see that price is actually coming from this higher high point. And remember, price actually sells from a high and it goes to a low. It buys from a low and it goes to a high. Okay, so remember you read the chart also forward. So you don't read the chart backward. Okay, so you can't say, okay, well, price made this high right here. It's going to make a higher low, and then no, you read it forward. So if you notice, the last major thing that was made was this higher high, okay, which is one of the extreme points. Okay, remember we spoke about the 3 types of highs. So we have a high, okay, then you have a lower high, and then you can have a higher high, okay? So your two extreme points are either your high or your higher highs. Those are the 2 points that I want to be taking trades on, okay? Now, when you take a trade from a high or a higher high, the price works itself down to create a low, okay? So this is what you see happening here. It started with this higher high. It tried to come down. It would have had to break this previous support line to actually form that new low that we're talking about, all right? Now, it didn't come here and form that new low. So what it did was that it got resistance, sorry, it got support. It found support on this daily support line here, which is at 106.74.8. So it formed that support line. And then what it actually did was it went up and it bought. So as it went up, it tried to break this previous resistance line to form a new high. However, what you'll notice is at this daily resistance line, it found resistance and it basically sold for 3 months, okay, up until last month. So it sold for 3 full months until last month, where it found temporary support on the hour and the 4-hour time frames. So if you notice, the price came here and it actually wicked out, right, on this daily, sorry, not the daily, the 4-hour and the 1-hour time frame. So if I drop down to those 2 time frames, you'll see exactly what this point is. So let me just use the highlighter tool, and I will actually make a point right there. So you'll see. So let's start at the 4-hour. So on your 4-hour, this is the point right here. This lower low, this is the point that we just drew right here. This is the support that it found on the 1-hour. Okay, going down, sorry, on the 4-hour. On the 1-hour, when you go down at same point right there, you'll see it actually made that lower low. That was a Thursday's move that we actually spoke about. So remember, I mentioned to you that 3 Thursdays ago, price actually started to buy based on finding that support. This is that support right here that we're talking about. That's the bounce that we're seeing from the bigger time frame on a monthly. Okay, so it ended the month. All right, ended the month. This was the 26th right here. This was the lowest point. And then from there, it actually started to buy. All right, now, so going back to the monthly, so this is what we're seeing right now. So the price is in fact coming from that higher high. It wants to continue working itself down to make that low. So what we do know for a fact is that we will expect to see what is known as a segmented low. Now, what that means is basically the price will come and make that low. However, instead of making a direct break to the low side, it formed a higher low, then came back, formed another lower high, which is actually that consolidation move that happens within the zone. So if you notice, this is the higher high, no new low has been formed. So it made a higher low, came back, made a lower high. So your next move is from this lower high to break this previous support line to form that new low. All right. So that's basically what you see on your biggest time frame. So when you drop down to your next time frame, which is now going to be the week, what you'll see is that you'll see more detail as to what has been happening. So this is that point on the monthly where the price actually started at that higher high time frame. Came down, it made that low. It was a direct break towards the low side. Then it came up, you got this confirmation that yes, in fact, this trend move is actually valid. So it formed this lower high, and then it completed that confirmation move by coming down and forming a lower low. Okay, breaking this previous low. So now you have higher high, low, right? That's the intent to go down. This is the first confirmation, which is lower high, to say, yes, I really am serious about going down. And then the final confirmation move, which is now going to be that lower low. All right, that's what you have right there. So that completed that first higher low that we saw on the bigger time frame. So let me mark that again. First, let me get rid of, well, let me leave those. And what we'll do is I'll mark right here. Okay. So that point that I marked right there, and I'll just change the color. Just so you'll see the differentiation. So this mark that I made right here is in fact going to be the higher low registered on the bigger time frame, which is the monthly. So let's check. And there we go. That's the higher low right there. All right. So once it made that, it came from this point, it went up, it made a lower high, which is this lower high is now going to be that new high, that smaller time frame, which is now going to be weak, as just, well, created a number of weeks ago. So we mark that with that red mark right there, and we'll go and we'll check it. There you go. All right. So this lower high is in fact translated to a high on your smaller time frame, which is now going to be your weekly. So now you see that it's consistent with the fact that the bigger time frame is in fact working itself down to create that low. Okay. So another thing that I did last night when I was playing around with this before coming on is if I took a trend line, okay. Now remember, for a trend line to be valid, you need at least 2 points. Okay. So we have 2 points on the monthly. So if I took a trend line and drew it from here, okay, and I touch this wick, so that's going to be my monthly trend line, because that is now the current trend that I'm seeing on the monthly. It came, made a higher high, came back for a confirmation for a continuation, which is the higher low. So the next move that we're expecting to see is a higher high. It came up, it actually failed. So it failed to actually break that resistance point. So now you have 2 points on your trend line. You now have a valid trend established on the monthly. You drop down to your smaller time frame again, and you verify this is the same trend line. See, it made a higher high right here, came down, made a low, lower high, lower low, complete downtrend on your weekly time frame. Came back up, okay, to try and break again, which it actually did. It broke this lower high point, but it stopped short right at the bottom of your trend line, and it created that overbought high, which we're now seeing on the weekly time frame. All right. So this is consistent with what I mentioned, that the price is in fact trying to work itself down to create that low point. All right. So we move on to the daily time frame. Okay. What are we seeing? More definitions of what we see, or confirmations of what we see on the bigger time frame. Again, this is your trend line coming all the way from your monthly. All right. So this is actually stretching from 2 years ago. So if you actually registered it, the highest point historically that NASDAQ has made since its inception was actually on Monday, November 22nd, sorry, 2021. Price has not gone back to this point since. So it has been in a continuous downtrend based on the monthly. And that's consistent with what we're seeing on the trend line. Yes, it came down, found support on this daily line. It tried to bounce back and do a rebound, but it came and actually touched that trend line at a lower point on Wednesday, July 19, 2023. So it took almost a full 2 years to actually come back to this point and to get another rejection. So on the daily, what we're now seeing is started with a higher high, which is essentially a lower high on your monthly time frame, which is the point that we marked right here with this red mark. That's the lower high on your monthly. That is also now a high on your weekly. Now that translates to a higher high on your daily time frame. So yes, it is it's very consistent with what we're seeing on the trend line based on the monthly. All right. So once it did that, notice what it did. It came down, broke directly to the low side. So you're having all of these direct breaks. Then you got the first confirmation, then your second confirmation. So that's 2 time frames now, smaller than your monthly, which have given you direct breaks, first confirmation, second confirmation that it is in fact in a downtrend. And remember, to have an established downtrend, you need to have lower highs, lower lows, lower highs, lower lows. So you actually had 2 confirmations right here on your daily. All right. Now, fast forwarding to what happened last week, that was just some back information to kind of set the premise for what we're seeing happening last week. Okay. So what we saw last week was a continuation of the buy, which started 3 Thursdays ago. Okay. Now, you will see here that on the daily time frame, we had a strong bullish candle, which closed the day on Friday. Okay. And everybody got excited and they were saying that, okay, fine. You know what? This move is actually going to continue buying. All right. Well, let's explore that theory for a while. If you say the move is going to continue buying, remember, the moves do not buy from highs. Okay? So it's a simple concept. Those of you who had the opportunity to ever be in retail or work in any shop or any kind of industry where you buy and sell, the concept is you want to make sure that you buy when the price is low, okay? And you sell when the price is high. Okay, so when the price, if you buy low, so if you buy something for $1, okay, and the price goes all the way up, the price is now rising up to $2. You bought it for $1, which means you can sell it to the public now at $2 when the price actually gets to a high point. So you'd have made $1 profit because you bought it at $1. Now the price is at $2. Now you can actually sell for $2, which means you'd have made $1 profit on your $1 that you spent, which would be 100% profit. All right, so that's the concept. Now the idea is now, if the price is high, okay, you want to actually sell from this high price down to this low price. Okay, so you want to make sure, since you bought when the price was at the dollar, it came up here, it's now at $2. This is where you actually sell. So you sell from this high point so that by the time the price actually gets back down here, you'd have already sold. You'd have already sold your item that you bought for $1 and you'd have made your profit here. Okay. But since we're doing the futures market, remember what you're doing is that you are placing trades on the anticipation of where the move is going to go, where the price is going to go. Okay, so you're not holding any assets. What you're doing is that you're now trading in the futures market. So what you're now doing is that you're saying, okay, fine, price is here at a high. Okay, I know the price is actually going to fall here. So what you're actually doing is that you're placing your trades at the high so that when the price sells, you'd have made profit. Okay, because you're anticipating that the price is going to come back down there. So again, you want to make sure that you sell when the price is high, buy when the price is low. That's it. All right. So last week we saw that we had this push. Now, the interesting thing about Friday is that on Friday, number of things will happen. All candles will close on Friday at 5 p.m. That's when the market closes on Friday. Okay. So remember, it opens on Sunday evening at 6 p.m. Okay. It trades all the way through 24 hours, basically. All right. And then closes on Friday at 5 p.m. All right. So here's the interesting thing about Friday. Friday's day candle is the end of the week also. But the end of the week is not the end of the month. Okay. So remember, you're in a new month. So you're now just 12 days into the new month, which means the new monthly candle is not going to actually be closing anytime soon. However, what you have to look at is the fact of what is required on your monthly time frame. Going back to what I said earlier, the monthly time frame requires a low because it's coming from a higher high. And remember, the market goes high, low, low, high. That's it. So your last major thing that was made was a higher high, okay? So you're expecting the price to come down to create that low, all right? So because the month just started, a lot of people look at this bullish candle and they'll say, okay, fine, you know what? The bulls are in control. This is going to actually continue going up. But remember what I just said, what is required on the monthly candle, and that is a low. So in order for a low to be made, you need to have lower highs, lower lows on your smaller time frames, okay? And when you check, you will actually see that the market is in fact making lower highs, lower lows, right? That's evidenced on the week. You look on your day, yes, lower high, lower lows, okay? So you know that that trend is in fact valid. Now, what you're looking at now is on Friday, you had a rejection in your resistance line, okay? So this is the day. This is where it ended on Friday. So if I expand this view, you will actually see more clearly that there was in fact a rejection on that 4-hour and 1-hour resistance area. Okay, notice the price came up and it wicked out right here. Okay, dropping down to your smaller time frame, you'll see it more clearly. So you go to your 4-hour. And now you're on your 4-hour, you'll see that more clearly. Price came right up here. It touched exactly on that 4-hour resistance mark before closing with the body well below those two lines. Now, this line was actually drawn from a previous high that was made on the 4-hour. So if you go all the way over, you'll see where that first point was actually made. And it was actually right here, okay, on this high. All right, it was drawn off of that high. So it came back. Oh, sorry. Yes, it came back to this high point right here. All right. So that's actually where that move, was. When you go to your 1-hour, you'll see more evidences of that. So if you look at your 1-hour, notice what you'll see on your 1-hour. Price came up, touched that line, okay, and it actually closed below, okay, closed below the body right there, but it actually closed with its first bearish candle, first significant bearish candle since Friday at 10 a.m. Okay, going down for more confirmation, let's look at the 45 minutes. Now remember, I don't do analysis on anything smaller than the 1-hour time frame, okay? I use those as entry confirmation time frames. So let's look at the 45 minute. On the 45 minute, you actually see an engulfing candle. That's how it actually closed on Friday. So it's the last candle on the 45 minute on Friday. It's an engulfing candle. Okay. Need more confirmation? Go to your half hour. There's even a bigger engulfing candle on your half hour. Fully engulfed the two previous bullish candles. So this shows you right now that you are going to, in fact, start seeing the price moving towards that bullish area. It's going to be bullish come next week. Okay. Looking at your 15 minute. So you're going down the line. Okay. First, real engulfing candle, followed by a second bearish candle. You know that this market is interested in going down. Continue moving down the line. You're now at your 5 minute. Now you'll say, well, my 5 minutes actually made a higher high. So higher highs, higher lows, higher highs. But look at it. Everything else, all your bigger time frames are sitting or coming from highs. So remember, your bigger time frame always sets the trend for what needs to happen. So your bigger time frame has not formed any sort of lows. So it cannot buy because there's no lows. So it has to continue selling. So irrespective of what you see on your smaller time frame, you have to pay attention to what your bigger time frames are telling you. So that's your 5 minute. Going on to your 3 minute, same scenario as what you saw on your 3 minute, sorry, your 5 minute before. Price coming from a higher high, came down, it stopped right here on Friday evening with this higher low. Market ended right here. Now here's the interesting thing. you go all the way to your 1 minute. Now, on your 1 minute, this is something that I don't want you to actually miss. On your 1 minute, you actually got your first confirmed break in structure. Price moved from this higher high point, came straight down, and it broke this previous higher low to form this new high. Now, why is that important? Because remember, the break of structures are actually going to start from the smallest time frame and translate to your bigger time frames. So look at it this way. Your bigger time frame sets the tone. The bigger time frame says, this is what I want to do. It sets the rule. And then your smaller time frames actually execute that. So that is why you get your trend from your bigger time frame, and you get your execution on your entry from your smaller time frames. So it's not the other way around. You don't do your analysis on your smaller time frame and execute on your bigger time frame. You actually do your analysis from the bigger time frame, and then you take your execution down to your smaller time frame. So this is why this is important, okay? The other thing that was very interesting in analyzing this is that once you look at your 1 minute time frame, you will notice that although it closed at this low point right here, it was not an exhaustion point. So the price has not exhausted anything at all on Friday. So it came on this move, it made this low, there's no exhaustion point. So all signs indicate that this market will continue to push towards the downside. It's only a matter of time. All right. Now, just for, fun, you can go down to even, I go down to even sometimes my 30-second time frame. Now, look at what happens on your 30-second time frame. Price came down, similar to the 1 minute. From the higher high, it came, made a direct break right here. That's your direct break right here to this low point. Okay, look at what it did also. It came back up, gave you the first confirmation, which is in fact a lower high, then came down for a final lower low. So you have your first full breaking structure right there. So higher high to low, lower high, lower low. That's confirmation 1, confirmation 2. Guess what? No exhaustion point. This is actually going to continue pushing towards the downside. All right. So that was just a little bit of how I actually get to the decisions that I made. So going back again to Friday, because this is very important, because I want to make sure that the mistake that I made on Friday, that it doesn't carry through somebody else making the same mistakes. You have to basically learn from those mistakes. Now, was it a costly mistake? No, because I'm still in the trade. So basically what I'm waiting on is for price to come back to pick me up, because remember, I'm going with the trend. That's the important thing about going with the trend. Once you trade with the current trend, even when the price retraces, it's only a retracement. It's only a matter of time for price to actually come back and pick up where it left off and go in the direction that you actually analyzed it to go. And that's why it is very, very important for you to understand that analysis is key. You must do your analysis. Let me show you another example as to what happened right here. So first, this is what I did. I came in, I set my sell limit right here. Price came up as analyzed, picked up my sell limit, but continued here. Now the error that I made was, guess what? Price actually came from this high to this higher low, which means when it comes back up to do that retest, it is going to retest at a higher high. And if it retests at a higher high, it can't be on the same level as a high. So going back, if you look right here, this is the previous resistance line, and that's exactly what the price actually did. So it picked up my order here, continued going up, hitting resistance, wicking out, body closing right here. So which means you now have that bearish move that you're looking for. All right. Now, so that was the mistake. The second mistake was the fact that while it picked up this order right here, I didn't wait for this candle to close. Remember, this is a 4-hour candle. So this actually hit. To see exactly when it hit, you would have to look on your 1-hour time frame. That actually hit at 12 p.m. 12 p.m. So that was actually, in fact, exactly 1 hour before the close of the Oanda 4-hour candle. Because remember that Oanda candle closes at 1 p.m. Okay, and the Vantage candle closes at 2 p.m. So that was just, I mean, an oversight on my part. All right, and I'll take full responsibility for that. So 12 o'clock, it broke right here. So there's no reason I should have been in here at this point in time, because remember, I'm taking that trade based on the 4-hour. So I would need to wait for another 4 hours for that candle to close before even entertaining taking an entry. But that's water under the bridge. The important thing is, yes, you're in the trade, but you're waiting on that retracement to be over so that the major move can continue. The other thing that I want to point out is that, remember now, the price is coming from here and it got all the way here. Market does not like to leave any gaps. So which means this is the range that you have traded in the past 2 weeks. So this was your low, your lower low, came up to your higher high, right back on another 4-hour. So this is a 4-hour support. This is a 4-hour resistance line. So you know you're in that zone. Guess what? The door needs to be closed before you expect any form of bullish movement again. So it's only a matter of time for price to actually come back. All right. So I was going to mention to you what actually happened on Friday. Because remember, the market does the same thing over and over. It just does it in different variations. But it's the same thing that it does every single week, every single month, every single hour, every single minute of the day. It makes highs, lows, lows, highs. That's all it does, nothing else. So let's look at a previous example. Okay. So here's a similar move to what happened. Price is coming from a lower low, all right, which is what it's doing over here. Okay. And it came up, it made this high. Okay. So a similar thing would be to that, where if let me just use a trend line just for clarity. So my entry would have been here based on what I did on Friday. Okay. Entry would have been right by that line. Price came up, broke it, came down, and continued up. Okay. So I'd have had to deal with this retracement right here. Okay. But you wait, look at what happened afterwards. Let me extend this trend line all the way over. So you'll see exactly what happens. And that's one of the reasons why I say you do not take buys from highs. You only sell from highs. I'll show that to you. Yeah, here goes the trend line. So this is where my entry would have been. All right. Came up in the red, came back down in profit for a little bit before coming back up, putting me all the way in the red. And everybody would be freaking out right now. Yes, price is going up. Came, made another higher low. Oh my goodness, it's going to continue going up. No, just wait. Just wait. Trust it, wait. Look at what happened. Price came up, came down. It did some consolidation. It came down, put you in the profit, came back up, you're in the red. Back in profit, in the red. Before finally taking that drop towards the downside. Now remember, I mentioned to you, now let me use the replay tool and I'll show it to you. Remember, I mentioned to you that price does not like to leave gaps. Okay? It's a similar situation to what we see on happening on Friday. And I'll just use the rectangular tool so you'll actually see that. Let me just draw a rectangle over this so you'll actually see it. So we can go back and check it. Okay. Draw that right there. Now remember I said, this is exactly how the market looked. Okay. On this particular day that it looked on Friday. Price came from a lower low, made that high. Came back, made a higher low. Would have set my entry right here. Price came up, picked up, continued going up. Okay, everybody will be like, oh my goodness, abort, abort, abort. It's going to continue buying. No, it's not. Just a matter of being patient. So look, remember I mentioned to you, market does not like to leave gaps. It does not. So it's just a matter of patience. So you may have to wait maybe, I know, a number of days, couple of hours, maybe, even a week, maybe 2 weeks, but price will come back. Just be patient. It will come back. So look at what it did. Whole bunch of consolidation points. Came down here in the blue, everything like that. Well, it did that, came right back up over the line. You're back in the red before actually taking off. Look at what happened. Price came all the way back to break this low that you entered on right there. See that? Price did come back. So it's just a matter of waiting. So because you did not get the correct entry going in early, you just have to wait and just deal with the retracement and the consolidation before price actually taking off. Because price likes to do that before it actually goes in the opposite direction. It will consolidate once you have a bullish move. Okay, once you have a move towards the upside, before price actually changes to go back bearish, you will have a period of consolidation before actually moving down towards that new trend that is being created. This was the era of consolidation that happened right here. All right, see that? Price just bounced around that line, your entry line, before finally breaking. All right, now let's go back and we just check it as opposed to what we see happening this week. Same move, lower low, high, higher low, higher high. Okay, so it's only going to be a matter of time before price actually comes back and breaks this point right here. Only going to be a matter of time, and that's where patience comes in. There's no need trying to chase the price all around and everything. Just understand this simple concept. Price sells from highs and buys from lows. That's it. Okay. Now, I know this video is going to be a little bit lengthy this week, but it's very important for me to actually explain what happens and also to help you not to panic. Whenever you do a move like that, you have to learn not to panic. Let me take some of these, things off here. Leave my charts back up. Okay. The other thing that I wanted to point out, let me take off all of these. All of these additional lines that I don't need. The other thing that I wanted to point out that I realized some years ago by just observing what was happening. If you take any point on the chart in history, and that's why back testing, I did a video. If you haven't had a chance to watch that video, go back and check on the channel and you'll see it in the archives. I did a video on how to actually check your trends, how to actually just see what the market is doing and how to actually be able to back test scenarios just to see what will happen with future movements. So remember, the markets, you back test, you look at historical trends, historical moves to establish trends towards the future. And that's all it is. Remember, the market just makes a series of highs, series of lows. That's it. That's all it does. It doesn't do anything besides making highs and lows. That's all the market does. I can't stress it enough. I know I mention it time and time again. It's because it's very important. So let's look at something right here. Let's say you didn't know anything at all about trading. And this is something that I have observed over the past 3.5 years, because things have to make sense for me in order for it to grow. Now remember, and I just want to encourage all of you people out there who are just starting on your journey. If you look at the statistics, okay, they will tell you that if all the profitable traders will tell you, and it took them between anywhere from 3 years to 10 years to actually become successful to the point of where they are. The average is actually anywhere from 4 to 5 years. So if you're just starting out and you're like 3 months into it, listen, you have a far way to go. There is a lot of information to learn. January coming will be my 4th year. And when I look back, because I journal, I look back as to everything that I've done and accomplished, and I've seen growth. So the important thing is you have to understand that this is a marathon. It's not a sprint. Every single billionaire that you see out there, including, Bill Gates, everybody, nobody just woke up one morning and became a billionaire. They actually worked very hard at it. If you actually read some of their bios, you'll actually see that many of them had days when they just thought of just giving up. Quick inspirational story. The guy who invented WD-40, okay? The reason why it's called WD-40 is because he failed 39 times. And the 40th time was the time when he got the formula right. 39 times he failed. So he called it WD-40. W for water, D for dispension, 40 for the amount of times that he tried. So every single person, you have to understand that in terms of when you're learning something, if you look at a doctor or a lawyer, successful doctors or lawyers, they go to school for what, 7 years, some of them 10 years, before they actually start making real money. So you have to look at it as an investment. Nothing happens overnight. And that's one of the reasons, why not the statistics also show, and look it up, verify anything that I'm saying, the statistics show that 95% of traders fail. 95%. Now you may look at that and you'll be like, oh my goodness, well, why am I doing something that 90% of people fail? Well, okay, here's my mindset on that. If 100 people show up for an interview and I know that 90 are not going to make it, I'm not worried about the 90. I'm only concerned about the other 6 people who are left, because I am the 6th person and you have 5 other people. So my job is now to make sure that one of those people, at least one of those people, does not make it and I make it. And I'm better than at least one of those persons. So that is the mindset. I'm not worried about the 90 people who will fail. It is what it is. So if you look at the world, it says that 90% of the wealth or whatever it is controlled by 1%. The reason why that is that 1% are willing to do things, are willing to stick to a particular plan that the 90% of people are not willing to do. If it was easy, everybody would do it. That's the thing. And that's why you only have a small percentage of successful billionaires or millionaires in the world, because they're willing to do stuff that the average person is not willing to do. All right. So quick backstory. All right. So if you look at the chart, any historical point on the chart, when you do your back test, if you take any line, for example, and you draw a line, just draw it randomly, you will see that price always comes back to that line. Always comes back to that line. So let's say, for example, you didn't know what you're doing, and that's why I have great respect for swing traders. Okay? Swing traders go in, they'll take a trade. They know that their lot size doesn't need to be big. Okay? And they're just waiting. So let's say I didn't know anything about trading and I decided that, okay, I'm going to enter on this blue line for a buy. Okay? So I entered right here and I used maybe like a 0.01 lot size. Okay. And you had, let's say you had $10,000 that you started off trading with. Okay. And you entered at this blue line for a buy. Okay. On this particular date, which was Thursday, September 28th, okay, 2023. Okay. That's where I entered for a buy. Now look at what happened. Price came up. I was actually in profit for a while before it dropped, came all the way down here. Okay. But remember, I came in on this blue line. Now, price came all the way up here, okay? 5,000 pips. So on that $1,000, okay, coming in on this entry, which was, like I said, September 28th, 2023. By the time the price got here, on which day? This was October 12th, less than a month, I would have made $500 on that $1,000 just by taking that simple trade, by not knowing what the hell I was doing. Price always comes back. Okay. Now, let's say, for example, I see that the price was here at a higher high point. And I said, okay, fine. I'm going to come in right here for another sell using my same methodology. Okay. I'm going to take a sell because the price is at a higher high point. I don't know what I'm doing, but all I know is the basic concept of just going in and taking my sells for my highs and just waiting. Remember, price always comes back to that line. So if I took a sell from up here, look at what happened. Price came right back down to that blue line and even past it. And you can do that multiple times. Just go and just draw a line and you just say, you know what? Listen, I'm just going to go in for buy or sell based on what I see the market doing. I'm not going to worry about it. I'm just going to invest a small amount of money, minimal risk. Guess what? It will work out for you at some point in time. It will, guarantee. So I say all of this to say that I went in on this trade on Friday, like I mentioned, could have waited, but I didn't. But now I'm forced to wait because now I'm just going to wait for the price to come back because it will come back to this line at some point in time because I went in on a high point on the trade. All right. So I know that this video this week was a little bit long, but I really wanted to go into some of the intricacies as to why I take my trades and why I really wanted to hold and what I'm looking for this upcoming week. So to summarize everything, my bias this week is going to be bearish. Okay, I repeat, my bias is going to be bearish. And the reason why my bias is bearish is that all my bigger time frames are coming from highs, which is where I want them to be coming from in order to be able to take those sells. Okay, so my bias is going to be bearish and it's going to remain bearish until my daily time frame comes back to create a new low. Not a higher low, but a new low. That is what my bias is going to be for this upcoming week. So basically, that's what I'm looking at. I took that sell and I got the confirmation that I needed that it's going to be bearish based on the fact that it got the rejection that I was hoping to see, and I actually did get on Friday evening just before the market closed. That rejection that I saw right there. All right. One quick thing before I close this video. If you notice, this week I actually did my analysis on the 0 chart, and I normally like to use the Vantage chart. And the reason for that is that there's definitely something going on with the data that's shown on the Vantage chart this week. I noticed it last night. The reason is, if you look at this, you clearly see that rejection right there. Okay. When you look at the 3 hour, for example, on Friday before I closed out, before I ended the trading day, still in the trade, the 3 hour did in fact register a higher high. Okay. Now I'm looking at the chart. It's not registering a higher high. However, when I mark the highest point that the price has gone based on the Vantage, this is this orange line right here. That's where the price has gone. So clearly some data is missing. And in previous weeks, I've seen where the day actually ended right where it was supposed to end. And then as soon as the market opened, all of this data just suddenly got erased, and it started like from about Monday. And then by the middle of the week, everything actually caught up and it was right back on point. So that's the reason why, one of the reasons why I actually went and did this analysis video this week on the Owanda chart. All right. So like I said, they run pretty close. It's just a matter of, they've been, they'll be off by a couple of pips, a couple of points here or there, but they usually come back to say the right thing and they move in a consistent direction. So that is it for the analysis this week. I do encourage you to actually make sure that you do your analysis at all times. Trust your analysis. Don't let people throw you off your game. Just stick to your plan and just know that once you do your analysis and you enter your trades on your high for the sell, enter on your trades for the low for the buy, you will be okay. It's just a matter of waiting. Just don't over leverage. Don't rush the process. You will learn. So God, thank you again for this opportunity to trade and to analyze. I pray a blessing over everybody this weekend this week as we trade. May we all be successful. We thank you in Jesus' name. Amen. All right, guys, take care and have a blessed and successful trading week.